Hello everybody, welcome back to the Globe, Eurizon Monthly View. That's the last Globe for the year, so we make a sort of a budget for the year, and we say that all in all things went in the right direction, very well as far as inflation is concerned. Inflation is closing, that's Eurozone inflation, is closing 2023 very close to 2%. It is true that core inflation is still close to 4%, but this inflation is ongoing. And the same picture we have for the US, with inflation not that far from the Fed objective. So from that point of view, everything was okay. But all in all, the true surprise for 2023 was that there was no recession. And in particular, the US economy surprised systematically on the upward. We ended last year thinking that this year growth would be close to zero. And now we have had this incredible revision. And 2023, the US economy grew more than 2%. And also for 2024, the estimates are positive. Eurozone was less positive, but better than expected. There was expectation for a negative number. There was a slight positive growth. It is true that since the second half of the year, there was no further acceleration for the Eurozone. But all in all, we may say that 2023 marked the return to, let's say, a moderation trend. Inflation moderated, growth moderated with no recession, so we absorbed the shock, the post-COVID shock, both for inflation and from growth. And that's what central bank took stock of. It is true that the central bank continued to hike rate this year. The big move was last year, but continued to hike rate. But now central banks are on hold. They've been on hold already for a few months. And in the last meeting, they have started to say that 2024 actually may be a year in which rates come down. And that's what the expectation for market are. Because if inflation stabilizes between 2 or 3%, there would be no need to have rates at 5.5% in the US and 4.5% in Eurozone. So that's what probably will happen in 2024. Easing, normalizing rate as inflation is no longer a monster to abate. That's the context we are in. That's how we end 2023. We start 2024. And what was the impact of market? Well, 2023 was a year of volatility for bond market again. The sharp rise was in 2022, but also 2023 was a sharp year of volatility. But at least we end the year with falling rates, both in the US and falling rates in Germany. But still, there's room for rates to come down, particularly at the short end, because rates are still there close to where the central banks are. But if 2024 is a year in which central bank ease monetary policy, there's still a lot of room for rates at the short end to come down as curves remain inverted. So we remain overweight bond market, both US and Eurozone bond market. And we have increased our position also in risky bond markets, because so far we had a positive view on investment grade, because there is an interesting spread, and this is less volatile. But as we had indication that central bank are more accommodative or less restrictive, we have extended our positive view also on the most risky part of the bond market in high yield and emerging markets. So we think that they may add a further source of revenue, of return for investors in 2024. Equity market. It was a positive year for equity market, despite central banks still tough against inflation. And it was positive because growth, as we have seen, surprised on the upward. So 2023 was a positive year for US stock market, was a positive year for Eurozone, less than emerging. But we continue we think that may continue, because equity market didn't rose without support. Earnings are rising, so there's no big detachment between valuation and earnings, and the earnings are projected to continue to go up, both in the US and in Eurozone, if the context is of moderate inflation, moderate but positive growth. So we end the year overweight equity, and we start the year 2024 overweight equity. And finally, a look at currency. For dollar, a part of the first part in which the dollar weakened was a sideways move. And we think that this sideways may continue over 2024. On the one side, the US economy is stronger than the other, that would support the dollar. But at the other side, if we go back in a low volatility environment with moderation in growth, that's less need of a safe currency. So that may in general, that favors the weakening of the dollar and the strengthening of the other currencies. So we think that these two forces for some time will compensate each other. That's why we were long dollar, we have reduced our position, now we are in a sort of a neutral position as far as the currency exposure is concerned. That's all for the globe for this month, and the end and the picture on 2023, and the legacy that 2023 leaves to 2024. I thank you for watching and for hearing, and the appointment is for the globe of the next month.